In this video, I want to show you how you can make so much money every day by trading the power of three or the AMD strategy. This is a strategy from a setup that happens every day at the market. Now, what is the AMD strategy or the power of three strategy? This refers to the key three phases of the market manipulation that institutional traders or the smart money use to make money or use to move the market every day in order to deceive retail traders. And these three phases are the accumulation, the manipulation, and the distribution. The accumulation phase is a phase which occurs when the market is consolidating, which is often during the Asian session. The smart money is actually in this phase accumulating positions, trapping retail traders into thinking that the market is directionless. And this is often characterized by a consolidation or a range movement of the market. Now, for the manipulation phase, the market makes a false move, which often looks like a stop hunt or a liquidity grab to trap retail traders in the wrong direction. So this usually happens during the London Open or the early New York session when the volatility of the market increases. For the distribution phase or the expansion phase, this actually happens after taking the liquidity. The market moves in the intended direction, rather like the trending phase, where the smart money begins to distribute their position for profit. This is where the real directional move of the day happens. So I'll be teaching you how you can see this. I'll show you short examples and you're going to enjoy and learn a lot from this principle. So you can see here, the AMD here is the accumulation phase and mostly the Asian session. Okay. And liquidity are here just at the both sides of the consolidation. Now this is in the bullish scenario. This is now the accumulation. This will now be the manipulation, the manipulative phase, and this is the distributive phase. For each scenario, this is the accumulation, this is accumulation, this is the manipulation, and this is the distribution. Okay, so now the power of three can also be seen in a daily candle. All right, every day the power of three occurs in a daily candle. You can see it every day. All right, so now for a bullish candle, the market would actually open here. This is a daily candle, but if you go to like lower time frame, like the 15 minutes time frame or the 5 minutes time frame, you would see this portion that shows you the range and how it occurs. So this is the market open for a bullish candle, which opens like with a consolidation, mostly during the Asian session. Okay, and now this is the distributive phase, which is the false move. All right, that is in the opposite direction of the intended move of the market. And now this will now be the distributive phase or the expansion phase. Okay, so and the market would now close after it distributes, makes the high of the day here, high of the day here. So, but for a bearish scenario, the market will open right there, bearish candle, and manipulates up in a false move opposite to the direction of the intended move for the day, and now makes the distributive phase here and let subsequently close there. Okay, so now I want to show you how you can trade this strategy. The first thing you need to do is to identify the accumulation phase, which is the range or the consolidation. So you need to look for a sideways market movement or sideways market structure, or which is like a tight range during Asian section or the early London session. You need to mark the highs and the lows of this range. All right, mark the highs of the low of the range, then wait for price to build up liquidity above and below the range. So that is the first step you need to take. So the second step is to wait for the manipulation, which is like the stop hunt or the fake move. So during London Open or the New York Open, price often makes a false breakout beyond the accumulation range. This is the liquidity grab, all right, to stop out retail traders and fill institutional orders. All right, if price spikes above the range and quickly reverses, it indicates a possible short entry. And if price dips below the range and quickly reverses, it indicates a possible long entry. So the next one is to enter the trade after the manipulation. So in this case, you need to look for the confirmation of reversal, like a rejection wick or a golfing candle, or use the smart money entry confirmations method. I'm going to show you right in the chart soon, which is the change of character and the return to order block or return to FVG. You need to enter a long position if the manipulation occurred below the range and price starts moving up. You need to enter a short position if manipulation occurs above the range and the price starts moving down. Okay, let me come again. Enter a long position if manipulation occurred below the range and price starts moving up. Enter a short position if the manipulation occurs above the range and the price starts moving down. Okay, now the fourth thing you need to do is to ride the distribution or the expansion phase. All right, so the expansion phase is the real move. It's actually the real move, okay, driven by the smart money. So you need to set your TP target at key levels like the previous day's high or previous day's low, or the other blocks or LVGs, or the key support and resistance level. That's where you need to set your take profits. Okay, and you would actually target a 1:2 or 1:3 risk to reward ratio. Avoid over trading and ensure that you are taking high probability setup. Your stop loss will actually be below the range from where you entered. Okay, so now let us see how you can trade this on the chart. Okay, now if you are using MT4 or MT5, first thing I would advise you to do is to go to your settings and enable show period separator, as you can see here, show period separator, so that it will separate one day from another. This is very, very important. I will also show you how to use the trading view for this strategy as well. But for MT4 and MT5, go to your settings and enable show period separator. Okay, so check that box. So when you've done that, you can see here the chart will look like this. So you would see that this line would come up. So this is one day, this is another day. So it will separate one day from another, because you need to know the various days. You need to know, like you can see here, this is the beginning of this particular day here. Okay, which is this particular day. So this is the beginning, this is the range, the Asian range, okay, which you are actually looking for. As you can see here, this is the Asian range, which is the accumulation. All right, orders are accumulated, and this is the manipulation at the London Open and sometimes the New York Open. And now this is the distribution, okay, just in one day. So if you go to a H1 candle, D1 candle, you're going to see that this is just one candle on a D1 time frame. And so this is 15 minutes time frame. That is why you can see it clearly expanded. Okay, so now if you are using trading view, the slightly different way, you're going to use an indicator. This is a trading view. You're using trading view, you're going to use an indicator, and the indicator I use is the Asian range indicator. All right, on trading view, search for Asian range indicator. You can as well use the Asian range by nickel, but or Asian range by midnight, mid-X or nickel, but the one I use is the Asian range indicator by Christoph Mystico. Okay, that is the one I would suggest that you use. So when you apply that indicator, this is how your chart will look like. So that indicator will actually mark the Asian, like this is the Asian range for this particular day. This is the Asian range for another particular day. This is the Asian range. So it will mark all the Asian range in each day. It will mark the Asian range in each day. You can see here that this is the Asian range on this particular day, and hence this is the accumulation, and this is the manipulation, and then this is the distribution. Here, this is the accumulation. Okay, this is the manipulation, and this is the distribution. Okay, so this something like this. All right, so that indicator will actually help you to be able to make it easy for you on trading view. All right, so now you can see this setup, how this setup has played out in previous times here as well. This is accumulation, this is the manipulation, this is the distribution. So your entry would be, if you're a smart money trader just like as I am, your entry would be when you have seen like you've seen like a change of character right here, and now you could actually enter here on the return to order block or return to LVG right here actually. So these are different entries you can actually make, and your stop loss would be here or here. Stop loss will be here or here. All right, so let's see another one. You can see here, so it's like accumulation, this is the manipulation, and now when you've had like your change of character, Okay, you have your return to order block or return to FVG. Marks your entry here. This is your entry, and your stop loss will be here or here. This will be a tight stop loss here, or you can actually also put your stop loss here if you want to play more safer. All right, so for the sell scenario, you can see here as well that this is the accumulation. All right, this is the manipulation, and then this is the distribution, and your entries will just be here. The return to the FVG will also be your entry in this case. Okay, as well in this case as well, this is your accumulation, this is your manipulation, and after the market has shown you that it's going to sell, it returns to the FVG, and you could have your entry here and place your stop loss right there. Some traders would actually enter after this manipulation, the accumulation has occurred and manipulation has occurred. Some traders would enter right here. All right, but sometimes it is safer to wait until you have, it's safer to do the smart money entry method until you have some sort of change of character and return to order block. All right, that is a more safer way. That is the smart money entry confirmation strategy. So if you are yet to join this YouTube channel, please subscribe to this YouTube channel. Click on the subscription box, comment down below to let me know if you gain value from this video. Give this video a thumbs up if you found value from it as well. And you can as well join our free Telegram community. In that community, I share free stuff and analysis that can help you to become better in your trading, and also free setup that you can trade at your own discretion. If you want me to as well mentor you, to help you, to take you by the hand, to help you to become a profitable trader, feel free to let me know. Do contact me. My contact detail is in our free Telegram community, and the link to my free Telegram community is in the description box of this video. Backtest this strategy and see how it works for you, and if it does, if you find it helpful, you can actually trade it. There are different strategies you can use to make money, and my aim is to expose all these strategies to you, and now it's now your responsibility to backtest them. If the strategy resonates with you, kindly use it, and you can be able to become a profitable trader. But if you need me to help you, please do not fail to contact me for one-on-one mentorship, and you'll be glad you did. Even if you have spent long in your trading career, you've not seen any result or any success, I would be willing to help you just for a little consideration. So till I come your way next time with another useful content, do have a wonderful day ahead. Bye.